Renting is buying patience until you're ready to buy a home. Compared to pre-pandemic pricing, rent prices have increased nearly 25% in the United States, with the average rent price hovering around $2,000 per month. With that said, we're seeing rents start to slow, but we're currently in a rent crisis. According to the data from the Pew Charitable Trust, corporate entities purchased almost 25% of single-family residences sold in 2021, using corporate leveraging to outbid actual buyers and edge young, low to middle income, and specifically Black and Hispanic buyers out of the market altogether. So while we are seeing the rental market start to slow, owning a home has become more and more difficult over the last couple of years. In fact, the gap between the haves and the have-nots has gotten even wider. Those that owned homes prior to the pandemic did very, very well during the pandemic as house prices surged due to low interest rates, high buyer demand, and a lack of inventory. And those that didn't own real estate and didn't purchase real estate have ultimately gotten left further and further behind. While inflation has slowed year over year, it's still sitting at 7.7%, which is putting strain on a lot of people out there, making it difficult to save enough money for a down payment to be able to purchase a home. So what is the current solution? Well, that's what we're going to talk about in today's video. We're going to talk about what you should be doing right now while renting a property, some things you can do to potentially improve the amount that you're paying per month. But at the same time, we're going to discuss what you're likely to see over the next couple of years with regards to rental increases and why homeownership is super important in the long run. Now, before we dive into that information, I want to make it clear what my channel is all about. It's always been about real estate education, helping buyers, helping sellers, helping renters navigate this crazy process. And my goal has always been to educate as many people through this process as physically possible. And I need your help to do that. By liking, subscribing to the channel, it helps me accomplish my goal. It helps the YouTube algorithm and helps me get in front of more people, ultimately helping me accomplish my goal of education with regards to real estate. Over the past few years, we saw rental prices rise nearly 18%. But more recently, the data is starting to show that home prices with regards to rentals is starting to pull back, but it's not declining. So every single year you're making your rental payment, you're likely going to pay more than you're currently paying at the moment. But there are a couple of things that you can do as a renter out there, as a potential renter, to try to save money. And the very first thing we're going to talk about today is trying to get a longer term lease from the start. Now, if you're someone that likes to move around a lot, you're not real sure that you're going to be in the same place, getting a long-term lease probably isn't something that you should do. But if you know that you're going to be in this area, in this location for an extended period of time, then I would suggest trying to lock in a longer term up front. So typically a landlord wants a lease for around 1 year, 12 months if you will. But instead of just agreeing to 12 months, maybe you ask the landlord up front, hey, if I'm willing to sign for 2 or even 3 years, would it be possible for you to give me the same lease amount over that 2 to 3 year period? Or even better yet, maybe if I'm willing to sign a longer term lease, you're willing to actually lower my monthly lease. So instead of maybe paying $2,000 a month, you'll lower it to $1,950 by me signing a longer term lease. And the reason this is a benefit for the landlord is because they don't have to worry about vacancies at the end of the lease. They don't have to worry about cost of repairing, of fixing that property once you move out. Every time you change a tenant on a property, as a landlord, you have to account for 2 to 3 months of potential vacancy on that property. So by signing a longer term lease, you're ensuring that landlord that they're going to have someone in there for a longer period of time and essentially saving them money by doing that. You might be watching this saying, Jeb, I don't want to sign a longer term lease. I think rents are actually going to pull back. I think they're going to go down. I think I'm going to be able to pay less on my next property than I'm paying right now. Well, the reality is rents are likely to continue increasing. Because housing affordability is becoming more and more difficult out there, many people that were going to be homeowners, going to be potential buyers, were thinking about buying, are going to be pushed into continuing to rent, on top of the potential of us heading into a recession. And during a recession, job losses happen, which is going to force some people to have to sell their property, downsize, and rent. But at the same time, it might cause some vacancies in the apartment and the rental world because some people that are currently renting may have to move back in with family. So at the end of the day, it really depends on your market. You often hear me say real estate is local, and many times I'm talking about, buying real estate, selling real estate, but it's also something that you need to consider when renting property. Because if you're in a market that has very few rentals out there available, very few opportunities available, chances are rents are going to continue to move sideways, potentially even up in those markets, even during slower times. Whereas if you're in a market that has a lot of investment property, a lot of opportunities on the market all the time of potential rentals, then maybe that's a market where you don't try to necessarily lock in a long-term lease unless you expect that your landlord is likely going to raise it. And that brings me into the second thing I wanted to talk about today with regards to trying to lower your rental payment. If you're currently in a rental that's coming due, or it's going to be due in a couple of months, you may try renegotiating that lease and renegotiating it for a lesser amount. Now again, this is only going to work in excess, a surplus of inventory coming to the market. Again, the thought is the same as before. By you staying in that property, it keeps that landlord from having a 1 to potentially 2 month vacancy on that property. So even though they want to raise the rent or get more money for that property, it's likely less expensive to lower the rent and keep you in the property than to trying to find a new tenant. An example would be if you're currently renting for say $2,000 per month, that's $24,000 per year going to the landlord. And let's say the end of your lease is coming up and you're asking your landlord, will you reduce my rent to say $1,900 a month? That's $100 less per month. So over the course of the year, that's going to be $1,200 less in that landlord's pocket. But by having that property vacant for 1 month or potentially 2 months, that landlord is going to lose $2,000 the first month and potentially $4,000 total the second month. So by lowering the rent $100, he not only keeps you in the property, but he saves himself money by doing it. Now, at the end of the day, not all landlords are going to agree to this. Many landlords out there look at the principle and say, hey, listen, if you're not willing to do it, I'm going to find a tenant that is willing to do it, and therefore I'm willing to let you go. So this isn't going to work in every case. But if you've been a great tenant, you've been a responsive tenant, you've always paid on time, landlords out there like to keep good people, good paying tenants in place. So they're more likely to work with you if you've been a great tenant. Now, for many people across the country, this method isn't going to work because rents are going to continue to go up and up. Depending on where you live, it might jump 2%, 3% year over year, even in a slowing housing market like the one that we're in at the moment. Here locally, we're seeing the USC Kasdan's multifamily forecast expecting rents to slow. But once you read into the report, you can see that they're expecting Los Angeles County to go up 4.7% in the monthly rental amount by 2024. At the same time, Orange County is expected to increase 7.1%. Inland Empire, 12.7%. In fact, the submarket forecasts for 2024 are also listed below on this slide, where you can see almost every submarket is going to be increasing by at least 2% by 2024. So at the end of the day, the cost of living is going to continue to get more expensive as you rent. And honestly, that's one of the huge downsides of renting. That's actually something that you can fix. You can actually fix your monthly payment by buying a house. But at the moment, I want to talk about when you should rent a house, and then we'll talk about the advantages of owning a home. So at the beginning of the video, I said renting is buying you patience until you're ready to buy a property. So renting isn't a bad thing. Oftentimes it can be a good thing, especially when it's not the right time in your life. Maybe you don't have the money for a down payment. Maybe you don't have the ability to get a gift for the down payment, or maybe you don't qualify for any sort of down payment assistance to help you with buying a home. At the same time, maybe your credit scores aren't where they need to be in order to buy a home. Or maybe your credit scores are decent, but by waiting a little bit longer, increasing your credit, it actually saves you more money per month, and at the same time gives you the ability to qualify for more homes. So in both of those cases, not having a down payment not having the credit scores you need to buy are when you should consider renting over buying. At the same time, if it's not the right time in your life, because maybe you just got married, you and your wife are trying to figure things out, you're not ready to take that step. Getting married is tough in and of itself. And the idea of buying a home, potentially having kids, just adds way too much to your plate. So you're thinking that renting to start gives you the ability to save, gives you the ability to work on things, and likely puts you in a better position, then you should consider renting at that time. Also, if you're someone that likes flexibility, maybe you just graduated college, maybe you just got your first job, you moved to a new area, you're not sure if you're going to stay there, or maybe you're someone that just likes to move all the time. You don't like to be locked down. Well, I would consider renting in those circumstances versus buying a home, because buying a property kind of locks you into an area. And with the market appreciating nearly 40% in just a 2-year period of time, you want to have a longer term time horizon when buying in this market. But if you're somebody that wants to buy a home, you want to become a homeowner at some point in the future, well, there's definitely advantages to buying a home as well. The first one is that you're building equity every single month that you make your monthly mortgage payment. When I used the example earlier of paying your landlord $2,000 per rent every month, $24,000 per year, that pays your landlord's mortgage. Or if his mortgage is paid off, or that money goes into their pocket, you get no benefit from that money. Yes, you get shelter, but you get nothing more than that. Whereas owning a property, if you paid $2,000 for a mortgage every month, a portion of that is actually paying down the principal balance on that loan. And in theory, putting that money into a forced savings account that at some point in the future, you can potentially tap, or when you own your home free and clear, when you sell it, you can take that equity and potentially put it into another property. The second thing it allows you to do is build appreciation. Over the last couple of years, we've seen homes appreciate nearly 40%. I mentioned how the haves and the have-nots, the gap got wider during the pandemic. Those that own property were able to benefit immensely from owning real estate, and it's because homes appreciate over time. I'm often talking to homeowners who bought their homes back in the 60s for $19,000, $20,000, and I'm able to sell these properties today for over $1 million, $1.5 million in many cases. It's not because they did anything special or bought at the lows in the market. They bought when it was the right time in their life, and they held it for a long period of time. And in turn, they've gained appreciation by doing that. That's how home ownership helps you create long-term generational wealth. But the third advantage of owning a home is potentially tax breaks. In many cases, you get to write off a portion of the interest on your mortgage, your property taxes. There are things that you can write off every single month. And in turn, at the end of the year, getting money from owning that piece of real estate. The fourth thing is you get to renovate whenever you want. You don't have to ask your landlord for, permission to do it. And in turn, raising the value of that home. But the fifth thing is the most important. The number one advantage of owning a home is that you're fixing that monthly payment. As we discussed earlier, rents are expected to continue increasing over the next couple of years. By buying a home, locking in your mortgage, and by fixing that monthly payment, you know exactly what you're going to pay every single month, regardless of what happens with the economy, regardless of what happens with inflation. Your monthly mortgage payment is going to be fixed when you own a home versus wondering what's going to happen to your monthly lease payment when you're renting a home. So while I do expect the rental market to calm down, rental increases to pull back, I don't expect that you're likely to see any deals when it comes to renting property. So if you're planning to buy a home, do me a favor and check out this video here.